So here's a chart a lot of people probably haven't seen. This is the central bank balance sheet for Canada, and it goes back to 1962. And we can see that it was going along at a pretty steady pace, always up and to the right. But there's the first little blip that happened 1999, 2000, which was the dot-com bubble. The Bank of Canada had to add to their balance sheet, put some liquidity into the market to get us through that. And then once that all ran off the books, it was up and to the right again until the great financial crisis happened in 2010. But when you look to the right and you see just the enormity of the amount of money, the amount of liabilities that the central bank put on its balance sheet is staggering. We went from just under $120 billion on the balance sheet to almost $600 billion. Now that's starting to run off. This is technically quantitative easing. When the money's going on to that, that's quantitative tightening. They're buying bonds. They're driving down the interest rate. So for the interest rates to bottom out again or to come down lower, ultimately the central bank is going to have to start buying those. They need a lot of stuff to continue to roll off their balance sheet before they can get back to the upward momentum that we're seeing. Now, the only issue is this is going to considerably, it's not likely to get back down to the current trend line. It's going to probably stay above that and then start to move up and to the right again. Once that up and to the right starts happening, I think that's when you see some more favorability in the real estate market. But right now, money is moving out of the real estate market and it's cycling. We're starting to see it cycle into the US stock market. Even the Canadian stock market's been extremely good as well. The gold market, the Bitcoin market has all seen some of that flow. And a lot of people around the world are not sending their money to Canadian markets for their real estate. There are better opportunities at the moment for people to make a return on their money. So for Canadian real estate to start making that pivot to the upside again, I do believe that the central bank will have something to do with that. It's just how much more are they going to use quantitative tightening? As of right now, there's still some of that. But if we start to see some cracks in the system, we are going to need to start. The bank is going to need to start potentially taking on some of those liabilities and adding more leverage into the market.